Let's get straight to it. When the government unveils its budget, it's not just politicians and economists who pay attention. Everyday people across the UK start to wonder what it means for their own pockets. Will it bring relief, or will it mean more careful budgeting ahead? On October 30th, the government announced its latest budget. The Chancellor stood outside Downing Street, red box in hand, ready to reveal the financial roadmap for the coming year. This moment always sparks debate and speculation, as the nation waits to see how the new measures will affect everything from taxes to public services. Every time this happens, we all wonder, will it help our wallets or make us tighten our belts? For many, the budget announcement is a turning point, shaping decisions about spending, saving, and even holiday plans. This year, the timing was key, right as we started thinking about Christmas, when money's already tight. The festive season is a time when families hope to treat themselves, but rising costs and economic uncertainty can put a damper on those plans. The big question, would the budget boost our confidence to spend or make us more cautious? With Christmas just around the corner, shoppers were already weighing up whether to splash out on gifts or stick to a stricter budget. In the weeks before, uncertainty was everywhere. News headlines were filled with speculation, and many households felt the pressure of rising bills and stagnant wages. Many of us held off on purchases, waiting to see what the budget would bring. Retailers noticed fewer people making big buys, as everyone waited for clarity on what they could really afford. The government hoped its plans would encourage people to spend and give the economy a pre-Christmas lift. A boost in consumer confidence could mean more money flowing through shops and markets, helping businesses big and small. If the budget had good news, like tax cuts or more support, people might feel secure enough to spend. That sense of financial stability can make all the difference, especially when families are deciding whether to treat themselves or hold back. That sense of security can mean the difference between splurging on gifts or sticking to the basics. For some, it's the difference between a festive season filled with treats and one focused on essentials. Retailers and the government were hoping for a spending surge to kick off the festive season. Shops decked out in lights and decorations were ready, but would shoppers respond? The budget was delivered, the headlines rolled in, and we all started to react. Social media buzzed with opinions and families gathered to discuss what the changes might mean for their own finances. But did it actually work? Did the budget really put more money in our pockets, or just more worries in our minds? Let's look at the numbers and see what impact it had on our wallets and on the high street. Here's the headline. During the 4 weeks ending November 28th, consumer spending in the UK rose by 2.2% compared to the same period last year. That might sound like a modest increase, but after months of barely any growth, it's actually a significant jump. For retailers and economists alike, this uptick is a welcome change, hinting that something has shifted in the way people are feeling about their finances. It's the first real sign that people started opening their wallets again after the government's budget announcement. For months, uncertainty and caution kept spending flat. But now, we're seeing a clear change in behavior. More money flowing into tills is good news for businesses, big and small, and for the wider economy. It means shops are busier, staff are needed, and there's a sense of optimism returning to the high street. It's a bit like a car that's been stuck in traffic finally picking up speed and moving forward. After a long period of hesitation, things are starting to accelerate. This suggests that the uncertainty which had been holding people back, whether it was about jobs, prices, or the economy, has started to fade, at least for now. The 2.2% rise covers everything from groceries to gadgets, clothing to electronics. Some sectors saw bigger gains than others, but overall, it's a broad-based improvement. The overall picture is clear. There's a positive shift in the nation's financial mood, and people are feeling a bit more confident about spending. The key takeaway is that spending has picked up, and that's a crucial sign for the health of the economy. But the big question remains. Was this all thanks to the budget, or was something else driving people to spend more? To really understand what's behind this surge, we need to talk about Black Friday and how it might have played a role in boosting those numbers. So, Let's take a closer look at how Black Friday may have influenced the nation's spending habits this year. You can't talk about late November spending without mentioning Black Friday. This sales event now stretches over a week, and it's changed how we shop. The 2.2% spending increase likely owes a lot to people waiting for Black Friday deals. Many held off spending until both the budget and the sales arrived, creating a burst of activity at month's end. The budget may have given people confidence, but Black Friday gave them the perfect moment to buy. It's hard to separate the effects, but together, they drove a surge in spending. Timing was everything. Political announcements and retail marketing worked hand in hand. The result? A sudden release of pent-up demand. Looking closer, clothing stores were the big winners. Spending on clothes jumped 5.6% in 4 weeks, up from 3.9% the week before. The cold weather played a big part. People needed new coats, jumpers and boots. Sports and riding apparel saw a huge 12.1% growth, showing people invested in hobbies and fitness too. Even general sporting goods stores bounced back with 1.3% growth. Hospitality also saw gains. Pubs and bars grew 4.2%, and fast food was up 6.8%. Restaurants saw a modest 0.9% rise. The rebound wasn't just about buying things, it was about experiences too. People were ready to socialize and treat themselves again. Clothing and hospitality, both reliant on discretionary spending, benefited most from the post-budget, pre-Christmas surge. These sectors saw the biggest boost as confidence returned. One of the most striking changes in consumer behavior this year was seen among young people, specifically those aged 18 to 29. This age group, often at the forefront of new trends and digital habits, had been noticeably cautious with their spending for much of the year. Throughout the spring and summer, many young adults were tightening their belts, especially when it came to online shopping for clothes and accessories. Concerns about rising living costs and job security made them more careful with their money, and online retailers felt the pinch as sales slowed. But in the 4 weeks ending November 28th, something changed. Their online clothing spending jumped by 4.8%, a dramatic turnaround after months of restraint. Suddenly, parcels were arriving at doors again, and excitement was back in the air. This group is particularly sensitive to economic uncertainty, so their renewed confidence is significant. When young people feel secure enough to spend, it often means they're feeling more optimistic about their finances and the future. Young adults are known for setting trends and influencing what's popular, so their return to spending can signal a wider shift in consumer mood. Retailers and brands pay close attention to their habits, knowing that what excites this group often catches on more broadly. The combination of clearer budgets, seasonal discounts, and the buzz of Black Friday deals clearly worked for them. Many young shoppers took advantage of limited-time offers, stretching their money further and making purchases they'd put off earlier in the year. Their return to spending gave online retailers a major boost, helping to lift sales figures and restore some much-needed momentum to the sector. It's a clear reminder that for young people, both price and confidence are key to unlocking spending. When they feel secure and see good value, they're ready to shop again. This reversal in spending is strong evidence that the mood among young consumers changed in late November, just as the holiday season was ramping up. For young people, this wasn't just a temporary blip. It marked a real shift in confidence and spending habits, with ripple effects likely to be felt well into the new year. But not all retailers benefited. Discount and variety stores saw spending drop by 9.4%, a steep decline. Department stores also struggled, with spending down 4.5%. Even though these declines were less severe than before, they remained in negative territory. The pre-Christmas boost didn't reach everyone. Consumers were selective, choosing quality or experiences over bargains. The rise of online shopping and changing tastes played a role. The spending surge lifted some boats, but left others behind. The high street remains divided. Essentials like groceries told a different story. In-store grocery spending was still down 0.7% year-on-year, but that's better than earlier declines. High food prices remain a concern, but the pressure may be easing. Online grocery shopping grew 1.2%, showing many still value convenience. The grocery sector stabilized, even if it didn't boom. Home furnishings and furniture stores continued to do well, with spending up 4.2%. People are still investing in their homes, even as growth slows. This suggests cautious optimism. We're spending thoughtfully, focusing on comfort and daily life. Our homes remain a priority, and we're willing to invest in them. It's another sign of a careful but not fearful consumer. But let's add some caution. The data only covers up to November 28th, missing the full Black Friday weekend and Cyber Monday. It's just an early snapshot, not the whole story. December's shopping is what really matters for retailers. The next few weeks of data will show if the momentum continues or fizzles out. Barclays will publish weekly updates, letting us track the trends in real time. For now, we've seen a promising start, but the main event is still unfolding. So, did the UK budget boost Christmas shopping? Early signs say yes, it helped restore confidence, especially when paired with Black Friday. The 2.2% rise in spending, big gains in clothing, and young people's turnaround all point to a positive shift. But not everyone benefited. Department stores and discounters are still struggling. Shoppers are more selective, spending on fashion, hobbies, and socializing, but cutting back elsewhere. The recovery isn't universal. The real test is still ahead. December's data will reveal if this is a lasting trend or just a blip. Don't jump to conclusions yet. Wait for the full picture. It's good to see optimism, but let's stay cautious. Keep an eye on the weekly updates as the story unfolds. For now, there's reason for festive cheer, but the jury's still out.